So yeah, yeah. So seek favorable financing terms or additional concessions from sellers. So, this is, you can just say, look, I'm in a position, I want to, um, uh, you know, this is what I can pay. This is what I can pay. So look for strategy or look for ways that you can find a way to negotiate those terms, and people will be open. They really will be open. We've had a few conversations and people have been very open because their choices are limited. So when their choices are limited, their backs on the wall, and they're really open to giving different terms, and be as flexible as you can. Always try and offer terms. Always remember, it's win-win. You win and they win. If you win and they lose, then it doesn't work. It's not right. You got to win, they got to win. So both of you got to be happy. So make sure that the terms are acceptable by you and the seller. Okay. Next slide. No, next point. Possible offer, purchase later options when the market improves. Yeah. So this is what we call the lease option. Lease option is buy now, pay later, or agree now and pay later. So it might be that the property, I'm working with actually a client, I spoke to them this evening. They've got a property in Belvedere. They put it on with an agent. The agent has had it for, I think, 12 weeks. They said it should be at a 550,000 or something like that. She asked me, I said, that's way above the market price. It's not going to happen. How many viewings have you had? None. How many viewings have you had now? One. No, two. I said, oh, good. You had two viewings. What did they say? Well, he said, what do you mean? You had two viewings of the same person? He said, yes. I goes, oh my gosh, that's not two viewings. So I said, what did they say? They said, oh, the carpet's old. I don't like the fact it hasn't got a drive and the price is too high. I said, that's what I've been telling you. So what she's now got to, now what she's doing is she's waiting 2 weeks until the contract expires with the agency. Then she's coming back to us. We're going to reduce the price and sell it quickly. And I've got that kind of lined up. But I told her, so what's happening is people are realizing that the market is going down a bit and they're going to have to readjust their prices. So when they readjust their prices, that's where we come in and we can just, get in there and make the deal, sort them out and sort ourselves out at the same time. So remember, there's going to be opportunities everywhere, whether it's a later on purchase, because some people might have bought the property and they don't want to sell it below what they paid for it. That's called negative equity. So they don't want to do negative equity. So you offer them, listen, you want 500K, I give you 500K in 5 years. In 5 years, the market should have corrected itself and the price should definitely be above 500K. It's gone up and down a little bit. It should go above that figure. Obviously, you have to do your statistics in the area, make sure that that is right. You've done your due diligence properly before you make those type of offers. You don't make that offer to everybody. So you have to do your due diligence properly. So that's a possible buy now, pay later. Also consider buy-to-let opportunities for investors. What do I mean by that? So explore the opportunities in the rental market as the rental demand might increase due to the down market. So what's going to happen now is, this is how it is. What you got to remember is it's like a seesaw. If something goes up, if something goes down, something has to go up. If something goes down on this side, something has to go up. So we're talking about renting and buying. So if buying goes down, renting goes up. The reason renting goes up is because the people that were going to buy now have to rent. And if they now have to rent, there's going to be more demand on the properties that they're renting. And if there's more demand on the properties that they're renting, the price goes up. The rental price goes up. If you look on the market now, you will see steadily over probably the last 6 months, the rent has been going up steadily. And this is for two reasons. Number one, because sales have gone down. And number two, the interest rate's gone up. Because the interest rate's gone up, people have no choice, landlords have no choice but to raise the rent. They have to raise the rent. And the people that are, the tenants that are in there have no choice to pay the raised rent, because if they go elsewhere, they still have to pay more because the rent outside is more. So they know generally this is a real thing that's happening. So remember that opportunities are everywhere. You just got to look. If you're a landlord, you don't panic. You just say, okay, what's the market rent? That's how much I want. Give the tenant sufficient notice and raise the rent. Raise it gently. Remember the lobster in a boil. How you cook a lobster? You don't throw a lobster in the fire. You turn the water up. You turn the heat up very gently and slowly. It doesn't even realize it's been cooked. And that's how you got to deal with your tenants. You say, right, it's just going to go up by £25. Right, it's going to go up by £25. Right, it's going to go up by £25. Before you know it, it's gone up by 75 now. That's just an example. Obviously, it's a ratio depending on how much your rent is. And then you're looking at the market as well. So you can gently raise the rent. I've never had an issue with any tenants doing this. I've been up front and told them and said, look, this is what's happening. My mortgage has gone up. I have to raise the rent. I'll give you a month's notice. The next month after that, we're going to raise the rent. Once you have a good relationship with your tenants, you shouldn't have a problem with that. I don't have a problem. You shouldn't have a problem with your tenants doing the same thing. Look for areas with strong rental demand for future growth. When you're doing deals with, rent to rent, for example, you're doing a rent to rent deal, look for areas that there's a demand for the rent. So when you get that property, you'll have no problem renting it out. And how you will find out if there's a demand for the rent is go to Rightmove, put the postcode in the search, click on search, make sure you've ticked the already let button. Make sure you tick that and then look and see how many properties are let, and see how many properties are to let. If there's too many to lets, then there's chances are that place is not a high demand rental. If there's a lots of lets and there's not many properties left to let, then you know that that area has a high rental demand, and it's something that you might want to consider in terms of either rent to rent or sourcing property for investors. Okay, so consider commercial property opportunities. So as a landlord or an investor, you might want to consider diversifying your portfolio so you can mix your portfolio. So you don't just have to have residential, you can have commercial as well. Commercial is good if you know what you're doing. This is probably a training for another time, but I'll just give you a general idea. Let's say, for example, you had a ground floor premises, and it was just imagine a ground floor premises, quite wide, a very big shop, and it's just one big glass window and one big space. So ideally, you would like to rent that to one tenant. But if you're clever, you can split that up into 4. So you can divide it. You might have seen this in some places. They literally have a glass division between each business, and they put 4 businesses in there, and you've got 4 things going on. You've got nail salon, you've got barbers, you've got this, you've got that, all next to each other. So you've rented that place, let's say for £1,000, and you've rented it out for £2,000 to these individuals that can afford that small space. So there's clever ways to work with commercial property as well. So don't think, oh, commercial property is scary, you don't know what to do, da 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 da. So there's many ways to deal with commercial property. The most ideal one is commercial to residential, when you're converting a commercial property into a residential property, because it increases in value instantaneously. Instantaneously is worth more as a residential than it is as a commercial. So just bear that in mind when you're doing looking into diversification. Explore potential opportunities in retail, office, or industrial sectors. Just as I mentioned, retail, you could be just renting. Literally, you're doing a rent to rent on a commercial property. That's what you're doing. If that commercial is sitting there and it's empty and there's a demand, but people can't afford that big space, then you just go in there, partition, and rent out. And just make sure you're allowed to do that on the terms and conditions. So look at other opportunities as well. Try and mix up the portfolio. Don't walk past opportunities. You will see these opportunities. Don't walk past them. Just consider those as well. But have your eyes open for everything you possibly can. It doesn't mean you're going to do everything, but at least you've seen the opportunities. Because again, you can package that. You can go there. You can negotiate with the person that owns that commercial property and say, look, you want £1,000 rent. Supposing I can guarantee you that £1,000 rent, then you package it, give it to an investor that can come in, explain to them what it is. You've done the research in the area. These are the different businesses that could rent. This is how much they can pay. You can make £2,000. Give me £3,000. So for 3 hours or 4 hours work, you get £3,000 for packaging, doing the research, and handing it over to that investor. So there's opportunities everywhere. All right. Explore local off-market deals with estate agents. right, it's really important to network with local estate agents because they will give you off-market deals. The reason they will do that is because you're building that rapport with them. Build that rapport, they get to know, like, and trust you. Know, like, and trust you. You come in, you pop in, how's it going? Da 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 da. You know, you might see them a couple of times. You'll find the friendly ones. There's friendly ones, there's not so friendly ones, but isn't life about, you know, people are like that. So you find the ones that are friendly, you pop in, you see them 10 minutes, 15 minutes, you invest that time talking to them, what's happening in the market, you tell them you're new, you know, you're looking for, you don't pretend, don't ever pretend, because they'll see straight through you. If you're new, you tell them you're new. If you're experienced, you tell them you're experienced. If you've got property already, you tell them you've got property already. Just level with them and they will level with you, and then you can work with them. So remember to network with estate agents. Off-market deals may offer better negotiation opportunities and less competition. And the reason there's less competition is because no one knows about those deals yet. It may be that the agent has gone to view a property that very morning, and then you saw them in the afternoon. They haven't listed that property yet on the internet, and they're giving you some time. That because they know, like, and trust you, they go, okay, let me give this to you. I give you, I don't know, a day or two before it actually goes on the internet. This will give you the opportunity to work as quickly as you can, find some investors that will be interested in that property. It's off market, and then you can connect the two and make that into a deal. All right. Consider renovations and value add strategies. So this is what we call like the assisted sale. So look for properties that have potential for value appreciation through renovations or improvement. This is what we call the typical assisted sale. So a typical way you'll do this, you go to Rightmove, you will search in your area, you find some properties that have been listed for a while, you see that they need renovation. It might be a bathroom, kitchen, new carpet, decoration, whatever the case may be. You look at those properties and see and then you compare it to a property that is in very good condition that has sold recently, and see if you can bring that one to that standard. If you can, then the gap is your profit minus your expense. If you can, the gap is your profit minus your expense. So your strategy now is to find out how much you can sell it for, how much it will cost to renovate that property, and whether the seller is open to doing some kind of negotiation along those lines. Usually, when the sellers had the property on the market for a long time, they're open. They're open because they're fed up. They're like, oh my gosh, this property's been here for like, I don't know, 3 months, 4 months, and the agent promised me it would be gone in 2 weeks. What's going on here? And specifically, if that property is empty, always go for empty properties, because there's a likelihood that if you do that property up in the condition while the owner is living there, they may not want to move, and then you have a situation where they're stuck in the place that you just renovated for them. I've had this once happen to me, so be very careful about that. Take advantage of more affordable labor and materials during a down market. So during a down market, you might be working with contractors that may not have that much work to do, so you can take advantage because you can now negotiate the price down to do the renovation work. So because your profit is going to be what you have paid out to do that work minus what you're going to sell the property, what the property is going to be sold for. So whatever you agree to sell it for, take away the cost that it's going to cost you, makes your profit. So if you can reduce your cost, then obviously you're increasing your profit. So that is a good way around that. Keep your eye on the interest rates. I'm sure everybody's keeping an eye on the everyday doom and gloom. Oh, interest rate rising, the interest rate rising, interest rate rising. That's all we're hearing. It's not interest rates going down. It's interest rate rising. Oh, come on. So keep your eye on it. Keep an eye on it. Monitor the interest rate and make sure that you make informed decisions. I will cover that. What time? Yeah, I'll cover this. The mitigating against interest rates in a minute. So don't worry too much about that. High interest rate can force buy-to-let landlords to increase the rent. We've covered that earlier on a few slides ago. And where are we? Keep your eye on the rental figures as well. I remember earlier on I said that the rental figures, as people are not buying, the rental's going up because people still need to live somewhere. And the interest rate's going up. Therefore, the rental figures are skyrocketing. They're going up, 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 up. And it's so funny because I don't think I've seen, maybe I've seen it once or twice where the rental figure's gone up and then gone down again. It usually goes up and stays up. So keep an eye on the rental figures, because that's opportunity for rent to rent opportunities, and rent to service accommodation opportunities, because the rental goes up, that's more money in your pocket as an investor. Stay updated on rental figures and the trends in the market. Analyze potential rental income and consider its impact on your investment decision. So always do your due diligence, bottom line. Always do your due diligence. So in conclusion, by implementing these strategies, UK property investors can maximize opportunities in the down market, conduct a thorough research, negotiate effectively, and diverse your investments to achieve success. As I said about, commercial and, mixing it up a little bit, just diversify a little bit. Right, your questions answered. Okay, so what I'm going to do is I'm going to, first of all, answer this is quite important, to answer the questions that people posted when you guys booked your call, and hopefully it will answer some of the questions that we've some of the questions that have arisen because of this training. So Genevieve asked, interest rates concern and the impact for landlords. Louisa wants to learn about commercial property and how it works. And Stella wants to know about the compliance process. Now we've got 20 minutes. So what I'm going to do is, let's come out of this presentation a second. I show you what I have done and what I tend to do. So if you go to academy.kajoku.com, you scroll down and go to, see where it says need help. Can you guys see that? Need help. You click on need help. So we had, one of the questions was interest rate. So if I type interest rate, press enter. Hey, guess what? Interest rate rises and how to mitigate against the impact. So you click on that, and then you've got the answers. Interest rate rises and how to mitigate. You can charge higher monthly payment. Higher monthly payments. Interest only, explains that. Reduces affordability. You can do refinancing options are there. You can diversify the rental portfolio. You can adjust the rental income. You can plan for contingency. So the information is there. The information is there. It's all there for you. So we don't have to spend too much time in going over and explaining. You ask the questions, I give you the answers. So any one of you can go in there, type in that on that search and get that information. The other question was compliance. So type compliance and hit enter. What is the compliance process? So you click on there and it tells you register as a business, tax obligations, anti-money laundering, etc. So it's all there. It's all there. I've taken time to put all this for you so that it's at your fingertips. And I know all of this is in the training as well, but sometimes you need like quick access to certain things. So as you've put requests for these things, I've made a point to make sure that these things are accessible. What was the other thing? We had compliance, we had interest rate charges, and we had commercial property. Commercial property. Enter. How does UK commercial property work? Click on there. It tells you there in the United Kingdom, types of UK property, ownership and leasing, rent and lease lengths, all the stuff is there, everything at your fingertips. Also, how can you make money with commercial property is there. So you click on there and it tells you how you make the money on the rental income, how the asset appreciates, value-added strategies, development and redevelopment, etc. It's all there for you. So that is the way I answered those questions, because what I find, or what I was finding was happening before, is I'll be repeating myself over and over and over. And those that didn't hear the answer will now ask me again, oh, compliance. I'm like, we done this last time. Oh, commercial. Oh, we done this last time. So I've done it this way, just in case you don't have time to go to the training and watch the video, etc. I've done it like this so you can get quick access to this information. So I hope that helps you guys that has asked those questions. Genevieve, who was it again? Genevieve and Stella and Louisa. So those questions are answered there. If you have any other questions, please feel free to post those
Question,
questions.
please.
I mean,
A question, please. How do you get to those questions again? Those where
okay,
you type
I'll
it.
show you again. Thank you for the question. So I'll go back. So what you do, you go to, let me close this. You go to academy.kajoku.com. This is where your training is. Your training sits on this platform, academy.kajoku.com. Yeah. Once you get there, you scroll down here, you see, can you see it says need help? Need help. There's a need help button. Can you see that, Genevieve?
Yes.
Yeah. So you click on the need help, and then it says got a question. It says search for help. So you type your question there. So in your case, interest. I just type interest rate, enter, and then you go there. Impact, interest rate rises and how to mitigate the impact. And then you just click on that. Once you click on that, then this information comes up for you. I'll also be writing on the blogs. I'll be doing some blogs on these particular key things as well. So we'll be sharing on the blog as well, because I want you guys to be up to date with information at your fingertips. You should not be struggling with anything. We need to be doing business. That's what we're here to do. So any questions that need to be answered, we'll get the questions answered. We move on and we start doing business. That's really the key to success here. Speed is our best friend. So we need to be as fast as we can, because you're all busy. You're busy at work, you're busy doing business, you're busy with family, busy with church commitments, other things that you're busy with. So you need speed. You need to do these things quite quickly. I'm trying to be as efficient as I can so that I give you everything that you need at your fingertips. So that is those questions. Are there any other questions that I've not covered? Okay, you're more than welcome. Anything else that I've not covered before I talk about how you can make 120K in the next 12 months? Any other questions? James?
Just a quick one in terms of the rent to rent.
Yes.
So in terms of if you take on a property to do a rent to rent, obviously you're kind of charging rent on top of what you're giving the owner.
Yes.
So how much in terms of your involvement with issues, how much are you actually managing the property in terms of like costs of, if things go wrong, say the boiler goes wrong, whose responsibility is that kind of thing?
Okay. So usually when you do a rent-to-rent contract, it's almost like, imagine like a short hold tenancy. A short hold tenancy, if we reverse it, you think about the other way around. When you're a tenant, you will rent that place, and if the boiler breaks, you're not going to fix it. When you're a tenant and you rent the place and electric goes funny, the landlord normally takes care of it. So what you would do, you'll negotiate these things. Usually, it depends on how much money you're going to be making. If you're going to be making quite a significant amount of money, then you might take care of the boiler, you might take care of the electric, you might take care of even the gas safety, getting all that done, depending on how much money you're going to make. Generally speaking, it's usually the outside of the property is taken care of by the landlord and the inside of the property is taken care of by you. But it really does depend on the negotiation terms. For example, if you had a lot of work to do in there, you might say, look, I've got all this work to do and I'm spending all this money, I'm investing this money into your property. So I need you to take care of the boiler, I need to take care of the electric certificate, and I need you to take care of the gas safety. Those are the three things that I'm going to ask you to take care of. If they say, oh, I can't, then you point them, you say, look, you can go to British Gas. British Gas will do your boiler. British Gas will take care of your plumbing. You can just have a contract. It's going to cost you less than £50 a month. They will take care of that for you. The gas safety is called a CP12. The CP12 will cost you, I don't know, £75. It's £75 every year. And it's a legal obligation. It has to be done. The electrical certificate is about between £185 and £200 a year. And £200 for 5 years. And that covers you for 5 years. So it depends how you negotiate the terms with them. If it's such that you really want that property and you know you're going to make your money, then you can offer that as a sweetener. You can say, look, I'll take care of this for the first year, and then the next year you take care of it, or the next 4 years you take care of it. It's negotiable. It's negotiable. It really does depend on how much money you're going to make. If you're making a lot of money, then you throw everything at it. You just, I'll take care of the electric, I'll take care of this, because you're covering it. You've got to make money. If you're not making money, it could be a problem. So, for example, if you're doing a HMO on that property, your last room is your profit. So you take off, you take into consideration, you should be looking at between 500 and £1,000 profit you're making on a rent to rent, basically. If it's a very simple rent to rent, then you might settle for 300, 350, where you haven't had to put too much money in, and you just get, and it's passive. You can just get the money. You're not even worried about it. It's going to an agent and they're taking care of it. You're making 300. That's fine. But if you're generally managing the thing yourself or getting involved, then you should be looking at 500 upwards to make your profit. So that's kind of how you should be thinking about on a rent to rent basis, because you're renting it out and you're going to add value. So you might do it on an Airbnb where you're charging per night. So you're charging per night room rates. That's where you're going to make your money, but you're going to be working. There is work that's involved there, but it's worth it because, you know, once you systemize it, it's automatic. It will, you know, work for you. I hope that answers your question, James.
Yeah, definitely. Thank you.
You're more than welcome. Any other questions, guys, before I go into the 120K thing? Any other questions? Louisa, have you got a question for me? You're on mute. You're on mute. You're still on mute. Yes.
Sorry, I came late. Sorry.
Okay.
I just posted about what do you call it? Share ownership. How does it work?
Oh wow. Have I got shared ownership on here? Let's have a look. Do we have shared ownership on here? I believe we might have shared ownership. How can I invest a property with a small budget? Okay, shared ownership will be on there tomorrow. But the long and short of it, shared ownership is basically you don't own the whole property. You're going to be buying, let's say, for example, you had shared ownership of 50%. So what will happen is that property will be on the market for 50% less, roughly 50% less than it would be normally. So when you buy it, you only own half of that property. When you sell it, you have to now share whatever you sell it with the person that owns the other part of the shared ownership. That's why shared ownership prices are cheaper, but it comes with terms and conditions.
Okay.
I would only, I've done one shared ownership deal before, and it was the most difficult. Oh my gosh. I had to read a document that was 500 pages. It was hard. Seriously, the lady sent me a special delivery. She goes, oh, I goes, oh, can you scan it and send it? She goes, no, I can't scan it. I goes, why not? She goes, no, it's a really big. I goes, okay, send it to me. So she sent it, special delivery. They had to ring the bell. Couldn't even fit it through the letterbox. They rang the bell and handed me this thing. Boom. I'm like, oh my, what is this? She goes, this is the document for the shared ownership. I'm like, oh my day. I used 1 week to read it. 1 week. So there's nothing you can ask me about shared ownership I didn't know after that time. I had to do my homework. Shared ownership is a lot of work. It's a lot of work. And I only made, how much did I make? I think I only made, actually I made $7,000 on that deal. So it wasn't bad, but it's still, I did a lot of work because I was going up and down, I was doing viewing. This is when I was running an estate agency. Where was this again? Canary Wharf. So okay. Up and down, doing viewings. Oh my goodness. It was hard. That was a hard 7,000. It was a hard work. Read all this, negotiate with because you have to use special lawyers. There's special terms and conditions. For example, when you want to sell it, you have to go to a special platform first. It's got to go to a platform before it can go to the open market. Then once it goes to the platform, if those people don't buy it, then you're allowed to put it on the open. There's lots of red tape. Yeah, lots of red tape. So that's shared ownership. It's a bit of work. It's a bit of work. Unless you're making loads of money, you know.
No, okay. How about commercial property, or have you touched that already? Because
commercial property, yes, we did it just for you. Where were you?
Oh, I was on the phone back home with my dad.
I can't believe it. You came to the thing. You gave me the question, and he didn't really ask. Right. Just for you. Just for you. I'm going to show you again very quickly. Yeah. Can you see the screen? Can you see the screen? Am I still sharing my screen? Can you see it?
Yeah, I can see three. Is it three things at the top?
Yeah. Can you see academy.kajoku.com? Yeah. Can you see it? Yeah. So what you do, you go to academy.kajoku.com and then you type sorry, let me go back. You scroll down, you see where it says need help? Can you see that?
No.
Are you on? are you on the right screen? Can you see my shared screen?
I can't see anything.
Oh, what can you
Oh.
see now? Oh, you
Oh,
can see
okay. Yeah. I can
okay,
see.
you can see the screen. Good.
Yeah.
Academy.kajoku.com. Can you see that on the screen? It's where you log in for your training.
Oh dear.
Okay.
Oh.
All I can see is fingers, lots of fingers.
Sorry. I was trying to see.
Okay. You can't see it. You still can't see it.
No.
Oh dear. Okay. Basically, you can't see. So what can you see on your screen then? I can see you.
I can see. I can see
me?
you, but also there's a. It's a here to.
Okay.
Here is
You can
how.
see
Here is
me.
how to program work. Here is how to program work. So that's the only. No, I can't see it. It's not.
Can you see my shared screen?
Yeah, I can see.
All right, good. Can you see
yeah.
where it says income from property, associated referral? Can you see that on the screen?
No, hold on.
Okay, never mind. Yeah. You can't see.
Hello, Ken.
Yes.
Sorry, I just want to ask a question.
Yes, go ahead,
Please.
Blessing. While
When you want to get like you want to get a property with an investors.
Yeah.
Getting a property with an investors, like maybe 3 or 4 investors, to get a property and renovate and resell it.
Yes.
Did they have to buy the property through a company, or how would they do it?
So you actually want to buy the property? Is it going to be bought with cash or mortgage?
Yes. It's a cash.
Okay. Yes, I would suggest you do a limited company, but it might get complicated because you may have to do four people as a director, 4 directors. But the ideal way to do it is, yes, you do a company and then you have 4 directors on there who will each put in 25%. And then you have to go through AML, anti-money laundering, to make sure the money is legitimate, because when it comes to the solicitor will check the money and make sure it's, everything's in where it should be. So yes, a company is the way to do it. And then when it's sold, then you split, and then the company will take the split between them. The directors will take the money accordingly. So yeah, it have to be done through a company. Are you there? Did you hear that?
Yeah. Sorry.
I'm losing people. Huh? Sorry, did you hear me? I can't hear you.
Yeah, I can hear you.
Your line's gone.
You heard?
Did you hear what I said? Yeah.
Hello.
Hi.
Yes, I heard
Okay.
you. I heard you. So
Good.
Can you hear me?
I can hear you. Yes.
Can you hear me?
Yes.
Okay. When you open a company,
Yes.
you have to have a bank.
Yes. I can't hear you. Your line is a bit in and out. Can you move to wherever you were
With the company.
because the reception was better? Are you driving?
Pardon?
Are you driving?
Yeah, I'm driving. Yeah.
Oh, you're driving. No wonder. I think you might have to take time then. Talk to me tomorrow. Let's talk tomorrow. Because your line is better. Okay. I can't hear you.
Okay.
We can talk tomorrow, yeah? Okay. Just give me a call tomorrow. We'll talk tomorrow. Okay. All right. Let's go back to Louisa. Louisa, were you able to see the screen?
No. Let me see.
Okay.
No.
But can you see me? Can you see me?
Yeah, I can see you.
You can see me. Can you see my mouse? Can you see my mouse? The mouse moving.
No.
Oh, okay. Am I not sharing the screen? Yeah, I'm sharing.
I can see it, Ken. Louisa, are you on a phone? A mobile phone?
Yes.
Oh, that's probably why.
Then you might as well switch. Flick to the next screen. Flick across, and you might see the shared screen. Just slide across. Can you see? Slide across. Just okay. Never mind. I'll have to. Good. I think you might have done it. Oh no, you're back.
Oh.
All right, Louisa. I think you're gonna have to watch the replay.
Okay.
Yeah, you're gonna have to watch the replay. Basically, if you just listen, you go to academy.kajoku.com. Once you go
Okay.
there, that's your
Uh-huh.
area. Once you go to the training area, you scroll down and there's a
Mhm.
little box that says need help. There's a little bubble that says need help. When you click on that need help, you just type your question there, commercial property,
Okay.
whatever,
Okay.
and the answer will come up.
Okay.
Anything that
Okay.
doesn't come up, let me know and we'll get it on there for you.
Okay. All right.
All right?
Okay.
Okay,
Yeah.
good.
Thank
I've
you.
got 3 minutes to share with you how to make 120K in the next 12 months. So what I'm doing is I'm working with a few people closely. I'm offering a mentorship. If you're interested in a mentorship, in fact, who's interested in a mentorship? Just put their hand up and then I'll make a note and then I will contact you and let you know more about it. You can just raise your hand electronically or physically, I don't mind. Okay, James, I've got you. Let me stop the share so I can see everybody. Okay, James, Sean, I've got you. Anyone else? Going. Blessing, I can't see you because you're driving, so it won't be wise to put your hand up. But I'm going to assume Blessing is interested as well. I've got Louisa there. I've seen your hand. Okay. Genevieve, I can't see you. You're probably driving as well. I can't see you. Are you able to give me a wave or not? Okay. She's interested. All right, Genevieve. All right.
That's
What I'll do is I'll
Stella.
reach out to you guys and
That's
I'll
Stella.
let you know more information about
This is Stella, not
Next.
Lisa.
I beg your pardon?
Stella.
Oh, Stella. Oh, sorry. Sorry, Stella. Oh my gosh, all that time you were so patient. I've been calling you Louise all this time. All that time you didn't say anything.
That's why
my.
I'm correcting. That's why I'm correcting you now, Stella, not Lisa.
Oh, sorry, Stella. Okay, your hand is up as well. Okay. All right, so I'll reach out to you guys. I will contact you and let you know some more information about that, and then we can take it from there. We have reached our time. It's 29 past. I've got 1 minute left. I can squeeze in one very, very quick question if anyone has it. Any one of you have a very quick question? Maybe not you, Blessing, because you might be driving and it's still in and out of reception, and we're going to talk tomorrow anyway. Any question? 1 minute, 30 seconds. Any other question? Okay. If you have any other question that we've not covered, we're going to meet again next month, the last Thursday of the month. If you need any questions answered before that, please send to my team, the support team, and then we'll get it on the help. What do you call that thing now? The help desk. We'll get it on the help desk for you so that that question will be answered. And just remember where that is as well. The help is always there. Don't suffer in silence. One mentor said this to me many years ago: do not suffer in silence. Someone somewhere can help you. So just reach out. We're here to help you. We're here to support you. Reach out to us and we'll do our best to help you to succeed and be progressive in your property business. Okay, guys, remember, don't stop learning because life never stops teaching. Smile, make someone happy today. And remember, look for problems because problems equals profit. All right, guys. God bless you guys. Take care. See you soon.
Thanks,
Bye-bye.
Ken.
Bless.
Bye-bye.
Bless. Good night, everybody.
Good night. Good night.
Bye.